And welcome out to our Friday Fun Day show for the halftime report here on April 26, 2019. And guys, I got one question. Are you guys doing as well as that GDP was, or are you feeling more like an Intel this morning? Coach Matt, Coach Noah, what are your thoughts?
That is a great question. Am I doing as bad as Intel, as bad as oil, or as good as the GDP report?
Yeah, yep.
I would say I'm in the middle somewhere. I'm certainly not as good as a 3.2% GDP number coming out of the U.S. I'm certainly not as good as that. That is an amazing number, to be perfectly honest with you. To see it go from the where we were to a 2.2 versus 2.5% expectation, to see that revised upwards to 3.2. And honestly, guys, Noah and Cody, it wasn't just the 3.2 that was impressive. I mean, net exports added an additional 1.03%. Gross domestic investment was up. Personal consumption was up. Private inventories was up. That GDP report was a very, very good report. And on the backs of that extremely good report, it begs the question, Noah, and I want to throw it to you on this: why is the market not up more?
Well, I think it's already baked in. I was just looking at the GDP numbers. That's a good number, way better than the expectation. And again, the market's just been stagnant. I think it just has to do with the fact that it's right up against resistance. I mean, it's right there. Everybody's been watching, waiting, hanging out. And you go first, Matt. You be the first person to buy above resistance.
Yeah.
I'll go second.
Well, my order's above resistance, so
all right.
I'm waiting on that as well. But when you see the headline number like that, and it's 3.2%, and you wake up in the morning and everything you see, I mean, my morning routine is very simple. I wake up, I check Twitter. That's what I do. And I see what everybody's talking about. Everybody's talking about the 3.2% GDP. And I'm like, wow, that is a fantastic number. And obviously already knew Amazon's earnings, and we'll get into that here in just a second. So I'm thinking mixed on earnings, but a GDP number that is really, really, really good. Let's see if this is the catalyst, because it certainly could be a catalyst for the market to break out of resistance. But it just did not do it. It's still kind of up there hanging around, just waiting and waiting and waiting and waiting and waiting. So it's going to be interesting to see what happens over the course of the next week or so with that resistance level. But if that resistance level is broken, I think everybody's buying, correct?
Regardless
of what that is. It's just going to be a race to I'm not sure what number next, but it's going to blow right through 3,000, I think.
Oh, if it breaks 2947. It's not just us that are waiting for that, guys. I think it's everybody that is waiting for that, because the S&P 500, unlike the NASDAQ, the Dow Jones and the Russell 2000, we'll rank the different indexes differently based on technical parameters, right? And what we're seeing in the charts of the individual securities within those indexes. But at the end of the day, it is the S&P 500 that is the barometer of the entire marketplace. It's what we start with every single day, regardless of our ranking system. We start with the S&P 500 because the S&P is the barometer. And so, it's just kind of, we're all waiting for that to, regardless catalyst, to kind of break out of resistance. I do want to get to Noah's take on this. Noah, you're a Fed whisperer, correct?
A Fed whisperer? I mean, I'm no Larry Kudlow, but yeah.
So you don't think we should?
You teed that one up for him.
Decrease rates when the GDP of America is 3.2%, and no, you don't think that?
Well, it makes perfect sense, doesn't it? We got 3.2%. That means we have to cut rates.
Rate cut. But the Fed's on tap next week, guys. The Fed's on tap next week. And after a first quarter where I think you could only describe the first quarter economics as very good, if not great, given where we were the fourth quarter of 2018, right? Well, we all agree with that. The economics we've seen has been better than what we expected it to be.
A little better than what I expected. The thing that I keep coming back to, and that's my biggest probably cause for concern, is just how much they lowered guidance last quarter.
Yeah.
Before this quarter. So yeah, I mean, they did well. Numbers look good, but they lowered the bar, to clear it. And you've seen some of the big fish, knock it out of the park, and a couple of other big misses. But I think across the board, the numbers have been pretty good.
I think I honestly, and I think we're only about a third maybe a little bit more than a third through earnings so far. I think at the latest count, I don't know what the count is today, so so excuse my ignorance on this, but I think we're around 190 S&P companies that have reported so far in this earnings quarter, and it was widely expected for earnings to have a quarter-over-quarter decrease in revenue, and early on in earnings season, that's what we've seen. But this last week in earnings has been pretty good in terms of beating the earnings per shares, beating the top line and bottom line numbers. And you've now seen numbers coming in that we might actually show a positive increase in revenues in this quarter, where we actually expected a negative. So that's been a slight positive. Economically, almost every economic number in the last month to 2 months has been fairly decent I wouldn't say there's a great economic number right now, but I would say it's decent to good from an economic perspective. The Fed has been very clear with us from the snapback and the Allen Iverson crossover they did in December and January of this year to the point where nobody expected the interest rates to go up in the fourth quarter, in the third quarter, in the second quarter this year. Does the GDP number at 3.2% put a little bit more, pressure on Jay Powell to further normalize the rates in your mind, Noah?
It shouldn't.
I hope so.
I would be dumbfounded.
I'd
be dumbfounded if they lowered rates.
Well, I don't think they're doing anything, number one. But I'm talking third, fourth quarter this year, down the road a little bit.
Yeah, I mean, I actually still think you're going to see a rate hike personally, but if we do see a slowdown, particularly coming out of Europe, I think that.
No, I don't think we're going to see one. I think it's already there.
Well, yeah, I mean, see one versus acknowledge one, probably a little bit different.
Yeah.
So we can keep looking to news out of China for trade deals, or we could pay attention to the actual numbers out of Europe. Mm-hmm. I like the rumors out of China myself. It's so optimistic.
Yeah, it was interesting today to watch Kudlow after the GDP report came out saying, with the U.S. economy being so great, it's going to give us a lot more ammunition in those Chinese U.S. trade wars. And the whole time I'm thinking, literally 2 days ago, you were calling for QE4 and rate cuts, and now the economy is doing absolutely amazing. It's just like they talk out both sides sometimes, in my opinion. The one thing that I think the Fed can rest easy on, in my opinion, and it's not something I agree with, but based on the numbers, we got to point out the numbers. Inflation, especially coming into the GDP report today, guys, the inflationary numbers in the GDP report were only about 0.9% year over year. And that gives the Fed, and whether you buy the argument in the PCE, the GDP, the CPI report, the PPI report, all of those inflationary indicators that we get, whether you believe them or not, every single one of them are underneath 2%. And the Fed has stated that that they have a target of 2%. And by the way, Japan has stated that for years and years and years and years and years and years and years. And that's why they've created an economic stagnation for 30 years in Japan. But that's what they're relying on is hey, inflation's low. Whether or not you agree with the numbers, okay, I don't, but whether or not you agree with the numbers have been low from an inflationary perspective. That gives the Fed a little bit of, leeway towards they can say, okay, yeah, maybe GDP is good, maybe the economy is good, but it still allows us to print more money. It still allows us to have a low interest rate because inflation in our numbers has not shown its ugly little head yet, right? And so that does give the Fed a little bit of caution.
Well, shown its ugly little head, or just the way they calculate those numbers hides the true inflation. I've never really trusted the act. Well, they massage those numbers to make them look better, right?
Yeah. Well, I said somebody asked me a question last week, Noah, and I said, listen, I don't trust U.S. economic numbers, let alone China's. Okay, so let's start with that. So I don't trust the number, but it's that number. Whether or not we can sit there and bitch and moan and cry to the heavens and everything about inflation, but the Fed is going to track the PCE number. The Fed is going to track PPI. The Fed is going to track CPI. And if those numbers show that is less than 2%, if that shows that the numbers are less than 2%, that gives the Fed ammunition to keep interest rates where they want, despite an economy that is starting to heat up a little bit.
Well, if it's heating up, do you think they will actually raise like they should?
I'll celebrate a rate cut. I mean a rate hike. I will celebrate a rate hike. In fact, I'm going to tell you right now, I know this sounds weird, but I think it would be bullish.
I agree. I think that the response would be,
I can see that.
yeah, it'd be favorable because I think everybody's kind of watching that. It's just like anything else. I mean, they've had so much stimulus over the years. It's kind of like life support. You know, a rate hike would be like, the doctor saying, oh yeah, we can pull them off of the respirator.
That's exactly what it is. No, I mean, think what if the Fed raises rates after what happened last year? What's that signal about the economy? It signals what everything we're seeing in the numbers, everything we're seeing in the data, everything we're seeing in this 20% snapback rally we've had in the first 3 months of the year is justifiable to us to a large extent. If they cut rates, what does that signal to everybody? Oh, wow, we're seeing something that you guys don't. And that's going to be priced in. So I don't think rate cuts is really the name of the game right now, but I'm also a hawk on most things monetary and fiscal policy. So, take an old conservative with a grain of salt in today's monetary theory. But I do believe we should see rate increases. I'm not sure we're going to get there. And I certainly do not believe the Fed's going to change their stance in the next few months. Everything we're seeing in the data right now is towards, September, October, November, and December of this year. Everything we're seeing. And that's kind of what we're seeing with the other central banks as well. That's what we saw with the Bank of Canada. That's what we saw with the European banks. That's what we saw with the Bank of Japan this past Wednesday, is everybody's kind of putting it into that first quarter of 2020, whereas the Fed is still leaning towards the third, fourth quarter of 2019. So we'll keep you guys apprised of all things Fed actions as they come at us, but we just wanted to do a quick little update regarding, I don't even know what knows.
Well, I got a picture of the Fed in action.
Oh, creating the bubble. Oh, I like that. Is that the real estate bubble, the debt bubble, the quantitative easing bubble, the monetary bubble, the derivative bubble, the stock bubble? Which bubble are we talking about here?
You pick them. It's a big one.
Throw the dart and see if you can pop it, right? Throw the dart, see if you can pop it. Let's talk a little bit about earnings very quickly, guys. We did have a couple earnings reports that are very important to the market. And it first starts with Amazon. Amazon, the big dog of the world, even though Microsoft, once again, golf clap to Microsoft hitting $1 trillion yesterday. Amazon, Noah, give me a quick read. I'm going to give you the numbers. You give me the quick read from a technical perspective based off the numbers, Noah. The numbers came in very good on earnings per shares, ladies and gentlemen, $7.09 per share versus the expectation of $4.72. Revenue came in at 59.7 versus the 59.7. And I saw a slight downgrade in the numbers on their guidance, but most of the market saw a slight increase. So let's go with a slight increase on the actual guidance. So beat on earnings per share, came in line with revenue numbers. Guidance, give it flat at best. Noah, what's your read on the technicals behind Amazon's earnings report?
I'm surprised it didn't move more. Pretty subdued reaction compared to they beat the earnings, like they beat it pretty handily.
That earnings per share number was destruction.
Oh yeah, absolutely. And so, it must have been baked in and then the guidance, if it was a little flat, but still, if they're beating that handily and then the guidance stays the same, that's not a bad sign, right?
No.
So yeah, but I think if you look at it, it's in that big kind of kiss goodbye area right now, around 1920, 1930. And again, I'm really surprised you didn't see a bigger reaction, and the volume was relatively low too.
Yeah, I'm a little surprised at the actual market's response to the numbers myself. No, when I read the numbers last night, I didn't watch the earnings. I didn't listen to the earnings call, but I did watch the market response when the numbers came out. And he had a little bit of whipsaw impact on Amazon's. If you do you have the overnight action on your chart?
Yeah, I think we can get that there.
The initial reaction was all the way up to like 1970, right? The initial reaction was really, really, really positive. And then it came right back down and it just kind of settled in after the conference call. One of the things they did announce was they're going to spend about $800 million trying to get one-day shipping for all the Prime members, which I don't know, how many of the halftime crew is Prime members? Let's get a number here. Oh, the halftime report, who's Prime member? I'm a Prime member. Cody, you a Prime member?
I'm a Prime member.
Okay, Prime member. Most people, I would assume, are Prime members of Amazon in 2019. but they're going to spend about 800 million, which as a prime member, as a consumer of Amazon products, I like that. I like that. As an investor, I'd probably like that as well. But again, the market response was subdued. No, is there any analysis that leads to a potential trade in the short term here?
Yeah, I think if you clear the intraday resistance and the market breaks the high, you go for it.
1940 coupled with the 2947 breakout of the S&P.
Yeah, absolutely. Because I mean, it is certainly showing strength. I mean, it did not sell off at all, and the market I think it's just biding its time. Same thing. I'm a little hesitant to buy things until I see the market break.
Mm-hmm.
And, that's a weird psychology, interesting kind of take on the market, why, everybody's just kind of playing wait and see. And I think once it breaks, then you'll see, the action follow suit and the bears will be crying. I'm watching a few perma bears on Twitter just melt down in real time.
So
why is the
irrational sleep?
Why is the market hitting resistance?
Just escalating. It's getting worse and worse for them. You can tell they're losing their minds. Don't fight the Fed. Isn't that the name of the game? Don't fight the Fed. And
it's literally part of the tackle 10 commandments that I walked down.
Do you have these written down? Are they written down yet?
Oh, I wrote down somebody asked me a question on a rule one time. And so on Facebook, I decided to write down the 100 rules of tackle trading rules one time. I am going to write the 10 commandments of tackle trading. Yes, I'm going to do that.
Go back out to the desert.
They were bestowed upon me in the high desert of Utah last week over the Easter weekend, and I just need to take the time.
What kind of bush were you burning, Matt?
You don't want to know. That is private information and private consumption. We're not going to get into that type of debate here. I'm just going to say that I was under the influence of magic. Let's just put it like that. So, but no, it is 10 commandments. Okay, it is 10 commandments. Don't fight the Fed. That might be commandment number 1, mind you. Don't fight the Fed.
Thou shalt have no other Feds before me. There you go.
Oh, that's solid. That's solid right there. So Amazon here, I like that analysis though. Watched 1940 on Amazon, watched 2947 on the S&P. A breakout on both of those, you should see both appreciate in value, no doubt. Let's move on to the next earnings very quickly here. Noah, Intel, tackle 25 stock Intel decided to break my heart here today, but this is why you caller trades on earnings, ladies and gentlemen, especially, and I've talked about this a lot, when you have massive price appreciation from a quarter to a quarter perspective, you need to wow your investors. And when you're looking at Intel over the last quarter, guys, you're seeing a company that has broken out of its resistance levels at 50, has price appreciated about, I'd say 12% in the quarter. You need to show something positive to your investors at that point. And Intel came in at 89 cents on their earnings per share. 87 was the expectation, so a slight beat on earnings per share. 16.1 billion versus the 16 billion, but they lowered guidance pretty aggressively here. And so even though the numbers came in lukewarm on the actual earnings per share versus revenue numbers, you got absolutely annihilated on guidance, and that's why guidance is so important. Down 10% on a stock that does not typically move a lot probably shook out some of those investors in Intel that don't understand how to collar and protect on earnings. Noah, what's your read technically here?
Well, if you don't have a position on Intel after an event like that and a gap down like that, I like to look for the naked puts myself. Because you still have some volatility in there. Right? What's that?
Great company.
Great company. They're not going out of business. They pay a dividend. If again, you got to collar those things before earnings. But if you don't have a position now, I think this creates an opportunity. $50, big support resistance zone. I mean, that's look how many times it tested off the $50 zone as resistance.
Oh, it's massive. Now, on the naked put, there's two ways to trade the naked put. Option number 1 is when you're simply looking to cash flow on something and you sell low delta under a support level that you never want to get assigned to, correct?
Right.
Okay. Option number 2 is to sell a put option at a support level that you are comfortable buying the stock at, correct? Okay.
Yep.
So if we're looking at a naked put, let's go to the trade tab. We have support levels at $50, $48, and $46. $50 is that significant whole number. It's the breakout channel that we all kind of nailed that breakout there about 3 months ago. $50 does have a fairly high delta at a 32 delta on the 28-day contract. So if you go to the 28-day contract, that 50 strike price has a delta of, what is it, 32?
31, 32 right there.
Okay. The 21-day contract, let's look at that $50 strike price on the 21-day contract, has a
30.
delta of 30. On the 14-day contract, I'm just trying to get a little look-see here, Noah, has a delta of 28. How do you go about, because those are all fairly aggressive deltas to sell a put option on. How do you go about determining what strike price, what expiration date, when you're making a decision to sell a naked put on a stock that you want to own?
Well, if I want to own it, I'm not opposed to going right there near the money. I think that even the $51 strike might be serviceable.
Mm-hmm.
Depends on how bad you want to own it. I mean, really is what it comes down to. I follow rules. I mean, I'm typically going for closest to 30 days and that delta. If I don't really want to own it, I want to be less than 25. But if I want to own it, I don't mind a delta of 30.
Yeah.
I might even, sometimes I'll even sell the at the money option, try to improve the odds of getting assigned. So
well,
it depends on what your goal is.
Rate too.
What's that?
I mean, you're also getting a higher cash flow on selling that 32, 30, or 28 delta. But again, and I want to be very clear here, ladies and gentlemen, with the halftime crew, you only sell that level of a delta on a stock that you have a desire to own and you're willing to buy it at 50, even if it goes to 47, correct, Noah?
Yeah. Absolutely.
I got construction outside my house for some reason. Hold on. Got the big old caterpillars. I'm staring at them right now. The big old caterpillars just drove by.
How's Cat doing? We can just jump over there.
Cat?
How's Caterpillar doing?
I saw a caterpillar. Let's buy Caterpillar stock. Is that the analysis, Cody?
Absolutely.
Hey, I don't need a lot,
Okay. It's that analysis is better than people who bought Zoom, ZOOM, not ZM.
That's true.
Hey, they got quite the spike out of that.
They did. I would say I feel bad, but I don't.
You know what? I would be the first to admit I have traded stocks by typing in the wrong ticker symbol too. So
yeah, but you were probably day trading something for 20 minutes.
Yes. Yeah. Definitely not like trying to buy,
I want to invest in this company for the rest of my life. So I'm going to buy a penny stock that I think is Zoom.
That's there used to be ticker symbol APPL. And I think they had to remove it because people were buying it thinking it was Apple.
Oh no, man! I'll bet you the majority of those trades came on Robinhood.
Oh, I want to doubt it.
I'll bet you they did. Okay, and then I'll bet you Robinhood sold the data to a third party.
And that's the sneaky secret with Robinhood. They don't tell you.
Free, guys.
Like, yeah,
nothing is free.
Yeah,
Next
free
earnings.
trade, no commission. Yeah,
there's no free trades, guys. Come on now. Now, Noah, Starbucks. Let's move through these. We only got 3 more earnings reports, but I think it's important to go through them all. Starbucks, give me your read on Starbucks. Technically, let me give you the numbers. Starbucks came in at 0.60 on the earnings per share, 0.56 on the actual expectation. Revenue came in at 6.3 billion versus 6.3 billion on the revenue, so came in line there. And I saw it was not official, but I did see a slight increase on their guidance. Give me your technical read on Starbucks here.
Okay. Well, I was looking at the daily chart and I was admiring that long shadow on today's candle and looking at that resistance zone, wondering if that high base is going to break out.
Mm-hmm.
So the long shadow made me want to go intraday and look at it under here. And I can see it breaking out and above 77. I don't think you need to wait for it to take out 78 or 79. I think you can clear 77. That little double bottom in there, that's a breakout right there. And, right back up above resistance. So I think that
a lot of that 79 was on the overnight.
Yep, it was. And so I think you could be a buyer right there above 77 and change. You don't have to go all the way up above 79. And again, anytime I see a long lower shadow after an earnings announcement, there, back here is not quite the same, but it's a similar, reaction. Long lower shadow can lead to upward movement.
I'm looking at it here, and I'm looking at the intraday here. No, 77. Anything above 77 looks like a trigger.
Yep.
I mean, you might want to clear the opening candle of that 77. I believe it's what's the high of the day?
Oh, 77, 27 or so.
Yeah, you might want to clear that, but that 77 looks pretty legit on a breakout here. And the numbers were not bad here, in my opinion. Good stock, good numbers, good pattern. Yeah, I could see that. We're gonna have to evaluate that in the scouting report. Starbucks might be on the list. Check out the scouting reports if Starbucks makes the list. Next two here, Noah, and then we're going to talk a little bit about what's going on in the oil market. Next two are oil-related stocks. Drill, baby, drill. Exxon Mobil and Chevron. Let's first take a look at Exxon Mobil here. Gap down in price. Exxon, give me the numbers here. 55 cents on earnings per share, 72 cents expectation. Just get a real bad miss on earnings per share for Exxon Mobil. 63.6 billion in revenue versus 66.3 billion in expectation. Miss on revenue as well. And then a 6.7 year-over-year decline in price. That is a triple bogey, in my opinion. You miss on earnings, you miss on guidance, excuse me, not guidance, but on year over year, and you missed on earnings per share. Obviously, Exxon performed what we expected, given the numbers were as bad as they were. It might have actually been worse from a technical perspective. Give me your read technically, Noah.
Well, technically speaking, that gap broke the first level of support. And, it's dancing on the next minor level, kind of we'll call it support with a small s. And it could fill the gap. And what was going in my mind, Matt, as you were talking about the earnings, is the oil producers like Exxon and the price of oil itself, the crude price, their profit margins are really heavily tied to the price, and consumption decreases as price rises, increases. And kind of economics 101, profits will be highest when you have a balance between supply and demand price wise. So I'm curious to know if these new higher oil prices are dragging down their earnings, but $60 a barrel is not that high.
It's not that high, relatively speaking. I mean, if you're looking at the ranges crude oil has had in the last 3-4 years, I mean, it's 27 to 107. Yeah. So I mean, it relatively speaking, it's really not that high.
So miss on earnings coupled with the gap. If it starts to take out the low, you might watch for a bigger correction. Cross-reference that with the energy sector indexes. Mm-hmm. If it starts to take out the high, it might be a real quick gap fill, might make for a good day trade. But otherwise, Exxon bores me sometimes because it doesn't move that much, moves a little bit. Good stock for holding, pays a dividend.
It's a value stock.
Got their dividend coming up, maybe an opportunity to pick it up on a discount.
Okay. Next one here, Chevron here, CVX, Noah, if you don't mind. 139 on earnings per share, 126 on the expectation, 35.2 billion versus the 37.3 billion, 6.8% year over year decline. I give this a bogey from an earnings report, so not nearly as bad as Exxon Mobil's, in my opinion, but it did miss on two of the top line and bottom line numbers, obviously showing a little bit of negativity from a price action perspective. Give me a read here on Chevron, Noah.
Well, it's pretty sideways, and this is a stock that pays a handsome dividend. That's a 1% a quarter, plus dividend. Mm-hmm. I don't see a huge depression in price. I mean, this is the type of thing where you've got some pretty solid support zones down below you at 110. You've got, some pretty hard resistance out above you at 125. This might be a really good covered call candidate, credit spread candidate. The miss was pretty solid, but they do pay a dividend. And so people don't dump the dividend paying stock.
Yeah. And the one thing I would say on all of this, if you're looking to pick them up, is wait for them to stop falling. Right?
Yeah. Wait. Don't catch the falling knife. That goes without saying, doesn't it? Well, we have to say it to remind ourselves.
Honestly, I would hope it goes without saying.
No, you have to say it.
But you have to say it, because if you don't say it, somebody will be like, oh, I should pick that up right now. And it's like, no, we're not telling you to pick it up. We're not giving you advice. We're talking to you as traders go, and don't catch the falling knife might make the commandments. I'm not willing to disclose if that made the final cut, but that's up there.
Oh, pun intended. Final cut.
There you go. I don't think he meant to do that, but we'll take it.
I don't know if I meant to do that. That was not intentional on that one. No, I will tell you, there's a lot of intentional things, but that was not one of them. This leads me to a conversation that I want to have with both Cody and Noah here. Crude oil. Let's go ahead and type in crude oil. We're seeing something happen on crude oil today that we have not seen happen in recent history. Crude oil has been one of those things that has been on fire. All of us were willing to buy it above the resistance level, as we talked about yesterday. The two earnings reports that happened on Exxon Mobil and Chevron really had an impact on the overnight numbers. When the international markets opened up, oil started ticking towards the downside. But the news of the day, in my opinion, from outside of the GDP report, the GDP report was the news of the day, no doubt about that. Fantastic, spectacular report. And by the way, with the GDP report, I talked about this yesterday. Let me say it again. It furthers the argument to invest in the U.S. versus the rest of the world right now. You are seeing that evidence play out over and over and over again. Japanese economic data came out really bad last night. European economic data is, what do we call the segment I do every day, Cody? Why Europe is burning today?
Or why the dollar's awesome? Why
the dollar's awesome, or however you want to put it. Between China, Europe, and Japan, you're talking about economic systems that simply are not the same value as what's happening in the U.S. You're seeing a slowing growth argument from around the world, and we saw a little bit that last year in the U.S. as well, but that has not portrayed in the first quarter of 2019. The U.S. is economically is really kind of pulling away from the rest of the world from an economic perspective right now, and we saw that yesterday with the Japanese economic reports. We saw that today with the U.S. economic reports. President Donald Trump tweeted today that he had called, and I'm not verifying this, I'm just giving you the news. I want to get you guys' take on it. President Trump said he called Saudi Arabia and basically said, knock it off. And I've said this before, Donald Trump owns Saudi Arabia. And if he did call them and said, knock it off, that's going to have an impact. Whether or not we see it or not in the numbers, we won't know for a little bit. But there was a little bit of negativity from the oil market coming down, and you saw it with heating oil today. You saw it with oil today. You saw it with Brent crude oil today. You saw it with gasoline prices today as well. Oil down 3.8% on the day, Noah. Does this change the underlying trend that has been dominant throughout the first 3 months of the year?
I was wondering if that technically counts as a violation. I'm going to be really interested to see where that closes. Because it is down at the bottom of the channel, and channel, I drew that line, so it's somewhat subjective, but I did hit the support data points, and if we end up with a shadow on the bottom of that candle, I'll think more that it might hold that zone. But if it ends up closing down and violating that, I think you might see some continued selling. A little uptick in the volume, big solid candle down. I'd probably be watching for support at 60 if we don't see it bounce up off the bottom of the channel there.
You said you drew that line a little subjective, but isn't that every trend line that has ever been drawn in the history of mankind?
Yeah, pretty much. I can draw them so that they fit my bias perfectly every time.
It's
I can justify my trade after the fact by drawing a lot of lines on the chart.
You gotta love being a trader, but drawing trend lines is an art. It's not. It's a skill and it's an art as well. The more support levels you can connect, the stronger the zone is, right? And yeah. I see you connected 1, 2, 3, now possibly a fourth here. As long as you can connect 3 support levels, that's a legitimate trend line. Technicians can disagree with it, but as long as you can connect 3 data points, that's legit.
I used to teach 2 or more. 3 is just a bonus.
3 is a bonus. I know. If I can connect 2, I'll draw that personally, but I don't want new traders being like, oh, I can just arbitrarily draw two data points on a chart, not even knowing if they're true support. I think that trend line's legit.
Yeah. Like all things technical, it's a concept. It's not a hard line, and it's just a technical ballpark. Yeah. And it's nothing more than a potential catalyst that traders tend to behave around. I would want to see like where my moving averages are. I'd want to see, where we're sitting at.
Drop it down
from maybe even a magical Fibonacci number. If I can get 2 or 3 of those technical things to line up.
Oh, I promise you, if you draw a Fibonacci, there's some pivot there. You can get a 38% number.
That chart's getting really colorful really
There,
quick.
there's
That
enough
is, yeah,
to
that's,
justify any Fibonacci number on that one.
oh yeah.
But no, do me a favor, drop it down into a 1 hour chart. You talked about how you would like to see a long shadow here. Draw me a horizontal trend line right at $63.
Got to go grab that little price level tool. $63. That's the golden ticket right there.
Yeah.
Boom.
To me, you have to reclaim 63 to maintain this bullish position.
Yeah, no doubt. Like I was saying, you can't close down below it. If it closes back above it, that tells you that the professional traders are still buying back in. Because I mean, who's really still trading, going into a Friday afternoon?
Nobody besides pros.
Just pros, right?
And algorithms.
Yeah, so
algorithms don't sleep.
Yep.
I love how beautifully those two lines even crossed right at the drop candle.
Oh, 63 is so, and that's why it was like, yeah, no, that's a pretty good trend line. Because I don't think Noah knew I was going to ask him to draw a horizontal level at 63, but I was like, yeah, that's going to be a pretty good number there at 63. But 63 to me has to be reclaimed for the bulls to still have that same type of mentality. Now, I don't have a position in crude right now. I was looking to get back in above the breakout channel, so I'm not into crude right now. But if it does reclaim 63 and give me a couple days of defense above 63, there might be a trade there. But you do have some negative news coming out today with what Trump said regarding Saudi Arabia and, the Exxon Mobil and the Chevron earnings reports. And, honestly, crude up 35% year to date, and just even a whiff, a breath, a burp of Saudi Arabia cutting supply, you might see some downward movements in price here.
So Matt, I opened up the little seasonal chart, and this is a little convoluted right now, but you can see the red line. That's the seasonal chart.
Mm-hmm.
You're seasonal on crude until July. 4th of July weekend is peak consumption, and after that, it sells off. But it's a seasonal bias I have every year. Bullishness on oil, clear up through that peak consumption period. And so, here we are, a little pullback, back on that daily time frame. I'll be watching for buy signals, even if it comes a little bit deeper. I'll still look for a buy signal above 60 because, again, seasonal bias, it comes down to, I don't think a little tweet from Donald will cause it to stay down long term. No. And whether or not the Saudis actually do respond in kind of, if he actually
I want to be very
call
clear on something as well. Donald Trump made that tweet in the morning. Oil broke support on the intraday at midnight last night. It was when the European market opened. It wasn't when the U.S. market opened.
So it wasn't direct correlation. There you go.
No, it might have been oil going down and Trump saying, hey, thank me. You know what I mean?
I like to take credit where I can.
Exactly. So,
yeah.
I mean, if you look at this on a 30-minute chart here, Noah, you'll see that overnight action right around when the European markets start opening. And right about midnight our time.
Yep, right around, that's midnight our time, 2 Eastern.
Yep. And then right when, go back Thursday at about 4 o'clock our time. Or about, right there. You start seeing it break down right there. It continues on with the earnings announcement that comes out of Exxon and Chevron. And then when the European markets open up, that's when you saw that 65 handle get broken. So I'm not sure there is a direct correlation between Trump calling Saudi Arabia or just very, very key technical levels of intraday support were broken. And then you had a rush of selling with stop losses underneath those intraday support levels. And that just kind of drove it back down into those daily support channels right around 63. I see this more as a technical movement based off earnings reports than I do a political environment, in my opinion. But I did want to make sure everybody knows that Trump did call Saudi Arabia. At least he said he called Saudi Arabia. Now, let's move on to the dollar.
Well, before we do that, guys, I got to ask for what we do usually at the halftime point of halftime show is ask for those likes, shares. Guys, you're watching this after the fact, please give us a comment.
I'm not going to solicit for likes like Tim and Cody will.
Oh, I will do it.
Like, share, follow me on Twitter.
Share, follow, do it all. Do it all.
Yes, please. And again, if you're watching this after the fact, add to the comments. I do check those. I do respond.
I'm not sure there is a Bitcoin. Is there a Bitcoin?
Bitcoin?
Bitcoin
Listen, crypto's in everything. I don't know if it's in commodities yet with corn and soybeans and wheat.
sounds.
But no, we analyzed Bitcoin 2 days ago. There's no analysis till it breaks 6,000. Not in our opinion, anyways. Okay, next, let's talk dollars here. I talked about, well, let me get your take on it first here, Noah.
Well, that's a solid breakout and slow down. This is kind of a textbook, breakout, Matt. This is about as well behaved an instrument right now as far as cycles go. It's from the, broke resistance, runs up to a new high. This is a perfect example of the shrinking candle, the top to the shadows getting close. And that's a double top right there.
Yep. If
you look at that. And then you look at it from this context where, we go back and say, swing ranges, typical swing range for this is going to be in that same ballpark. And there you are, you're right about range up after the breakout with those shrinking candles. That's textbook. I'd expect this to come back down and give us a little retest at 97 and change.
Well, and I would absolutely love that. As a currency trader, would absolutely love that, because I talked about yesterday how this is overextended in the short term. We actually know yesterday looked at kind of the cross pairs, that the dollar, the major cross pairs against the euro, against the pound, against the Swiss franc, against the CAD and whatnot. And he saw the same thing over and over and over again, that the market was just overextended in the short term with a lot of these other currencies coming back down into support channels with the dollar resistance. And even though you had an amazing GDP report today, you're overextended. And with the other currencies sitting at support, it was pretty clear you're going to see some profit taking care, reset the trend, reset the trade. And I would love a pullback coming into 97.5 by 97.70. Give me a pullback down into those levels. Give me a doji. Give me an upward movement in price. Have Marty the Elephant go back up. And that's going to be a great bullish environment when that happens.
How did he get named Marty the Elephant?
How'd I name him?
Yeah.
I've heard like 3 or 4 different names.
It's
now.
Marty.
Just changing
Marty.
names.
No, it's Marty.
All right.
Marty. There were a couple names that I tested, but it's been Marty for about 6 months now. And how I named Marty the Elephant, I have no clue. One day I was teaching for Legacy in some random location, and I was talking about this elephant jumping on a trampoline, and then I found a GIF with an elephant jumping on a trampoline. And so the next day I was teaching at, not the next day, but the next week I was teaching at some location for Legacy again. And I actually showed the GIF, and I taught, literally, I'm not kidding, guys, I taught technical analysis with an elephant jumping on a trampoline for 2.5 straight hours. I'm not kidding.
Was the gift just
I taught
going?
No, I would pause it at certain levels, talk about momentum and trends and candlesticks and support channels and widths, and how the trampoline is your support level. But when Marty hits the tramp, it doesn't just go straight back up. Watch how it slows down, creating those small candles, and then it explodes back up with the big. It was the greatest 2.5 hours that I've ever taught, at least in my own mind it was. And I nicknamed him Marty at first. But then I started doing it again. I forgot I called him Marty, so I called him something else. And then I just came back to Marty, and so he's Marty. He's Marty from Back to the Future, reincarnated as an elephant jumping on a trampoline, so I can teach technical analysis with it.
We might have to get you to make a video on that just to capture Matt's take of Marty the Elephant.
I'll make a video and just take credit for all of Matt's genius. It worked for me.
Been working for 15 years, Noah.
Pretty much, right? I tell you everything you know, right?
Get the green screen going in the background, and you can just be like, all right, Marty's here. He's
to be true, yes, I did learn tremendously amount from Noah early on.
Well, yes, this is really well behaved technically, Matt. Like as far as like technical like breakouts, like look at the momentum on the breakouts, look at the slowing momentum intraday, clean support break, little kiss goodbye. This is behaving about as well as technicals behave. So that dollar is, I think, very interesting. I'd like to see a retest too.
Hold on, I'm responding to chat. Hey, for the halftime crew, if you've ever seen me, teach Marty the Elephant at a Legacy, let me know there in chat. And let me know what you thought of Marty the Elephant. Did it help you learn technical analysis and candle widths and support zones and momentum and all that jazz? Now I'm back with you, Noah. What were you saying?
Just awesomeness about technicals. I was just commenting on how well behaved the dollar technicals
It
are.
is. It is from an intraday from an
Yeah.
intraday to a daily. It's really good, Noah. And I don't know if you were here when we were talking about Noah, but there's only been 3 times in like the last 15, 20 years where the volatility on the dollar has been so low for such an extended long period. And we're talking about 4, 5, 6 months now. Every time it broke out, whether it was up or down, you had a 10% price movement after that. Every time.
Yep.
I expect this dollar to continue to go up.
I would too, based off of those GDP numbers. And again, holding rates will help. I think the fear of a rate cut might slow it down, but I don't really see that as being rational.
No.
Yeah, it's not rational at all. The dollar and the GDP numbers, they don't care about them speculating on when they possibly might cut. No.
With Europe and Japan and China doing what they're doing versus the US from an economic perspective, with all those other countries indicating that they're going to start lowering interest rates. I mean, Australia gave us a massive hint last week of that. And the dollar actually thinking about rate, I'm actually starting to think about rate hikes, not rate cuts is what I'm starting to think about. And that should actually help the dollar here.
Oh, I'm biased on it, but I want some cuts. Oh, come on, add to my carry trade.
Add to your carry trade. That's right. Everybody, you guys need to start enjoying Forex. Forex is amazing. Great cash flow with the carry trade. Let's move on to everybody's favorite precious metal here, Noah. The gold, the shiny, the precious. What's your read?
I like the support kicking in. I think there's a bigger support zone down at 1250. But you're starting to see a little consolidation pattern in here, Matt, where the price action, let me get my little drawing there. Bottom slowed down and the top still coming down. That kind of creates that little wedge. That little falling wedge, I do think that if the dollar continues to strengthen, you'll see more downward pressure on gold. But again, if you're buying physical, not a bad idea buying the dips. I'd like to see a breakout above 1,300 before I consider being a bull again.
Let me paint a picture, see if you agree. Dollar retraces down to 97.50 by 97.70 over the next few days. Gold appreciates back up into 1,300. Dollar dojis at 97.50 by 97.70. Gold dojis between 1295, 1,300. I mean, I just see the future, Noah, and I see a short at 13 and I see a long at 97.50.
This is making me think of like a wicked pairs trade where you like write a bear call on the gold and you do a bull put on the dollar when they're at that extreme. There's a high probability of revision to the mean. The prices don't stay apart that long. So whenever you see them running opposite directions, it's a really awesome pairs trade where you're looking for revision to the mean on both instruments.
I'm sorry, I'm just palladium-backed crypto tokens for the recession, Thomas. Oh, that's not. Yeah, that's that's not hashtag Team Tackle. I'll tell you that. Platinum on the other hand, palladium on the other hand, we might have a conversation. But platinum-backed crypto coins for Russia, I don't know if I can get down with that one.
In Russia, tokens have you.
Yeah, that might be a little out there. Let's move on here. Is there any read on silver versus gold here, Noah?
Oh, let's see. Same basic chart. I actually like the technical zone for silver better. Mm-hmm. It's got the same falling wedge. It could be poised for a breakout, same thing, but it's going to go whichever way the dollar goes. If the dollar finds resistance, you'll see silver probably, I don't know. That support's it's a big zone there at 14.
And the reason I bring it up, Noah, is because I'm seeing that support zone as well, right there at about 1475. And that's the old reversal resistance pivot, correct?
Yeah. And I mean, this is a fun pattern, Matt, because it's that same falling wedge I was just drawing. It's that the support zones are getting tighter, and then it just pinches down into a big support zone. And then when you get the breakout, you can usually go relatively bullish on that, particularly if you've got a strong fundamental bias on something. But silver and the dollar running at the same time, I don't know about that.
I don't know either, but for 6 months, we saw gold outpace silver, right? even though gold, the GS ratio has been so radically to the high end on gold versus silver, we still saw gold outperform silver because of the safe haven status of gold that gold does enjoy in the US marketplace. But now you're seeing gold show a little bit of weakness versus on silver here, you see a little bit of a retracement coming back down into that breakout channel. If you switch this back out to a weekly chart here,
my weekly's a little bit jacked up. Let me go change the time frame here.
Yeah.
All right.
Yeah, you can just give me a 3-year weekly.
Oh, easy enough. We'll go. Okay, there we go. 3-year weekly. That's my favorite too.
So you see that break out and then retrace back down. You're sitting at a pivot point that's very, very, very important for silver here. And if silver can maintain that, maybe if it's just neutrality here for a short time period, I see that's relatively positive on silver. Let's look at gold very quickly on the 3-year weekly chart. Versus gold, gold still has a lot of room to come back down because gold has been outpacing silver. So let me see if I can convince you. And I'm just thinking off the top of my head here, Noah. And this is in a few days after, the dollar retraces into support. Long silver, long dollar, short gold.
Long silver, long dollar, short gold.
I know it's weird.
Maybe.
It's a little hedge.
I have to toy around with that and model
think
something
about
out.
that.
Yeah.
Think about it. Think about it. I know it's weird, but you're buying silver to hedge your dollar risk, okay, and to hedge your short gold risk.
I can see it. A little bit of arbitrage going on there, I think.
Well, and it's a quick out on silver if it breaks that support level.
Yeah, I can see that. Got to wait for the setup though. Got to wait for the setup. Timing would be really critical on that.
I agree. It's a weird analysis, but with silver being at that major support level, maybe. Think about it.
This is what happens when traders
peak.
are making things up on the fly.
That's what traders do.
I know. We just postulate. we create a little theory in our head.
We create a theory. We do some pairs trade. We hedge it with some silver. I mean, come on now. Let's make this go.
Well, here's what I think makes that interesting, Matt. You're not just talking about the idea. You're talking about the hedge against the risk.
Yes.
Which is I think something that everybody needs to get into their head. Deep in that part of your brain where you remember things that are important. You want to remember, always have your exit strategy or hedge strategy in advance, as you're even postulating your theory about going long this, that, or the other, going short this, that, or the other. What's your exit strategy? What's your hedge?
Well, if the analysis is, I believe silver, because it's at support, could price appreciate more than gold could. And if you're wrong, gold has a lot more room to move down versus silver does, because silver's got so much support. And it's not just the support level of 14.7, no. I mean, silver's got support all over 14 to 14.7. I mean, you could draw lines at 14, 14, 10, 14, 15, 14, 20, 14, 25, 35, 45, 55, 65, 75. Yeah, I mean, it's got support all over in that zone. So if gold fails to break out of that 1300 level and does start coming down, yes, silver might come down, but it also might stagnate because of how much support it has, and that will hedge the short on gold. But if you're wrong on the dollar, on the long dollar, silver should appreciate fairly aggressively coming off that, which would hedge the short gold trade. So it's a complicated pairs trade. There's no doubt about that. But just that silver at that support level, I just want to buy it. I literally, that's the analysis. I want to buy silver at that support level, but I'm having a hard time because my analysis on the dollar, which means I'm trying to find a creative way to buy silver without having the risk of the dollar.
Well, typically what I do, Matt, is I just go down to a little coin shop down the street and I buy some silver coins. Every time I see a good dip into a support zone, it's a good time to go get some physical. And then I don't have to think that hard about these things.
That's true. I do like buying physical silver eagles at 1470. There's no doubt about that. All right, boys. Last thoughts on the day. Cody, last thoughts on the day.
Last thoughts for me is look forward to that scouting report meeting. Definitely going to be a fun one with
market.
What's that?
Have you guys ranked your sectors yet?
I have not
What I'm
ranked my
doing
sectors
after
yet.
this.
Usually do it
Well,
right after this. Yep.
I'm doing.
So I'm looking forward to that scouting report meeting. That's the highlight of my Friday. That meeting is so much fun. Getting in there with 10 other traders and debating on whether or not it's a good setup or not.
That meeting's my favorite meeting, and I hate meetings, but that meeting I actually look forward to. I have a lot of fun in that meeting.
It's really more like
so my
happy
final
hour.
thought is, guys, look for the scouting reports.
Noah, last thoughts.
Well, I don't have any last thoughts. I just got thinking about the report meeting. I've got to go find some good
No,
picks.
it's like, oh wait, now I got to go find.
I got to go find some candidates.
Coach Frank has 180 picks already in. Now I got to go do some work.
Here's my thought of the day. You guys just sit tight. We'll go run some scans.
We're gonna go bird dog. We're gonna go bird dog. We're gonna go be your bird dog. We're gonna go bird dogs. It's gonna be hard because Coach Frank put all 500 S&P 5 stocks on the scouting report for us to analyze.
Just every single one. He just Googled S&P 500.
That's all he wants. He wants to beat me. He thinks I cheat.
I think he seriously does it while we're doing the show because he knows we're distracted. And then so he starts going in and putting in his picks.
It's what I do when I'm not here on Fridays.
You guys have such an advantage over me and Tim. I'm coming in with the fire today.
So that's not fair.
I'm going to come into, hey, what do you guys rank first? We rank currencies, commodities, sectors, and then obviously our picks. So those are our 4 process: currencies, commodities, sectors, picks. Which one do you do first?
I usually start out with the dollar and go through the currencies.
Yeah. I'll start dollar. I'll actually go dollar, sectors, commodities.
I go dollar, S&P, sectors, then I do commodities, then I do the rest of the currencies because I've already done the dollar, and then I do my picks. And then after I do my picks, I go look back at my sector analysis because you might see something in the stocks that are different than what you see in the sector. But I don't find that I modify my sector rankings that much. Maybe 5 points up or down, but I mean, I pretty much keep the trend, whatever the trend of the sector is doing. I pretty much rank it based on that.
Well, I try to do my sectors before I go run my scans, so I know which sectors where I have my strongest bias.
Frank starts getting at 8 a.m. I've known Frank for 20 damn years. Yeah, he probably does start scanning at 8 a.m. Yeah, I'll give him that.
Actually, speaking of the
it's all fun,
what
Frank.
Noah just said, look at the sectors first.
Week. You're gonna get it's just a process. When you're overinflated, you're gonna get beat back down. Who was the coach of the week?
Right.
Frank, it was a tie. It was Frank and there were 2 of them got 9 picks apiece.
It was me.
I was Noah. It was Frank and Noah.
That's right. Got a little competition between Frank and Noah.
Hey,
Cody,
I'm an excellent stock picker.
You are an excellent stock picker.
I need to get some in there
Cody,
this week.
You haven't won the award.
I haven't won the award.
I've won the award.
Usually beaten out by Frank here. I've even been first before, and actually the week that I was first and I had like a good 60 picks in there was when Christian went through and eliminated mine first. And I'm like, Frank or Christian, like, what are you doing?
Christian has some arbitrary influence on the coach of the week in the Bird Dogs meeting, no doubt about that.
Does.
Ladies and gentlemen, you've been listening to Tackle Trading's Halftime Report. If you like the report, hashtag Team Tackle, Tackle for Life. Guys, go ahead and give us a like and share. Tell a friend about it as well if it helps you navigate the choppy world of the financial markets on a daily basis. That's what we do here in the Halftime Report, is help you navigate the markets, help you go through your daily routine, making sure you do the analysis. And obviously, we like to hang out with you guys and have some fun along the way. Guys, we love our team over there at Tackle Trading. And if you're not a pro member of Tackle Trading and you want to get into those scouting reports and go out there and make some money in with those watch list picks, or get into the coaches lounges, or traders lounges on a daily basis. Noah, you do the traders lounge quite a bit for Tackle. What do you typically cover in the traders lounge?
Well, we meander all over the place and have a lot of fun doing it. I usually am going through just some of the trades, like we're covering the trade we did the previous day or what we did the previous week.
Yeah.
This week we talked a lot about earnings plays. We worked on some of those inverted butterflies and debit condors. And then we'll take turns sharing screens, and we'll talk about trades. We talk about adjustments, setups. I mean, we talk about the whole 9 yards. Like there's really no topic that we won't
Would you
cover.
agree with this? Here's the difference between the Traders Lounge, Coaches Shows, Cash Flow Club, Scanner Reports, all of the products that our pro members love versus the halftime report. We analyze in the halftime report. We apply in the other things.
Yeah. Yeah. The practical application is what that lounge is really best for.
It truly is. And guys,
Yeah, a student will bring up their own personal account and we'll walk them through a trade or a hedge to adjust it individually.
and also, if you need any help in any capacity, that's what that Traders Lounge is for, is to get help from one of the coaches of tackle trading on a daily basis. So definitely, if you're not a member of Tackle Trading Pro membership, make sure you get over there to Tackle Trading. You can sign up for a 15-day free trial, and you get access to the scanner reports for this coming week, ladies and gentlemen. I promise you, they're going to be rocking and rolling. We're going to put in our time. The bird dogs are going to come. We're going to scan the entire market, and we're going to find the best technical setups for all of us to apply next week in the market. And until then, guys, we're out for here with Tackle Train with the Halftime Report. Another week in the books. Halftime crew, you guys were awesome this week. We're going to bring the fire, and Coach Tim will be back with me on Monday. He is down in Houston right now for Legacy Education, teaching an amazing group of new students down for Legacy. So he will be back for us on Monday. Until then, guys, we're out. Enjoy the Scanner Reports over the weekend, pro members.
Later, guys.